Good morning from London. I'm Anna Edwards alongside Guy Johnson and Kriti Gupta. We're an hour away from the opening trade. Here's what you need to know. The pound rallies as Bloomberg learns a US-UK trade deal is set to be announced today. President Trump says the agreement will be, quote, the first of many. Rate relief for the UK, perhaps, with the Bank of England expected to ease policy later. But in the United States, Fed Chair Jay Powell says he won't be rushed into rate cuts. Plus, tariffs dominate European earnings, with Infineon lowering its guidance for the year. We will hear from the CEOs of Maersk, Vestas and Bosch.
In the meantime, a quick check on these markets. Green on the screen when it comes to the futures picture. Your stock 50 futures higher by 0.6%. The FTSE 100 right on its heels. A catch-up trade, perhaps, to what you saw over in the States yesterday. In the meantime, dollar weakness on the table. Euro dollar at 113. Cable at 133. The countdown to the opening trade starts right now.
Good Thursday morning. So let's park Powell and PSG, for that matter, and come back to both a little bit later on. I'd also like to point out that it's Lions Day and come to the main story of the morning, and that, of course, is trade. We'll talk about potentially this UK deal that we could be seeing unveiled, 10 a.m. Eastern, apparently. We don't have the details yet. But we're also getting a whole range of corporates talking to us about what they see on the trade front. And the one you really want to hear from is Maersk, the global shipping giant, out with its numbers this morning. And the number that really stands out, first of all, and most notably, is that it sees full year global container trade at -1 to +4. Now, previously, it saw +4. So this is quite a significant downgrade in terms of what it is seeing. This feels like it is very tariff, Trump-related, less to do with the Red Sea, which is the other story we need to fold into this. But the trade story is absolutely front and centre. We are about to talk to the CEO. It's going to be a fascinating conversation, Kriti.
In the meantime, let's look at Puma as well. Those numbers also crossing the wire here. The first quarter sales beating estimates, but not by a massive margin. I'm looking at a sales number that's coming in at about 2.08 billion euros. The estimate was about 2.04 billion. That's just on the net sales number. When it comes to the U.S. tariff story, though, they are making comments here that the outlook does exclude potential implications from the U.S. tariffs. So basically the same message, which is anything can happen.
Can I just point out, nobody knows. I've also spoken to the Infineon CFO this morning. He used the word guesstimate. I have no idea.
I think it was actually written down as well. So, yeah, it wasn't just out loud he said that word. But, yeah, so that's the story when it comes to the earnings story. Everyone is guessing at what the impact of tariffs is going to be. So let's talk trade from a different angle. And this takes us on to that wider trade narrative. We have got this reporting, people familiar telling Bloomberg that a UK-US trade deal is the one that President Trump was talking about yesterday when he put out that social post talking about how there was a big trade deal coming. This has sent the pound higher. Stocks futures in Europe have gone higher on this. So let's think about two things here, the UK implications and then the wider significance of this. On the UK, there's so much to talk about. Will this be anything more than just a framework deal, something very light on detail? Or will there be detail? Will they remove the 10% tariff? Will they remove the steel and aluminium tariff?
You don't know, do you?
The car tariff? No. I'm going to ask a lot of questions right now. What about services? That's a big part of the relationship between these two countries. Big tech, the digital services tax, that's going to be in focus. Agriculture and healthcare, you can bet that's where the UK media will focus a lot of their attention. How much does US business get into the NHS? All of that is going to be in real focus. But then there's the other question. Does this tell us anything about the broader trade narrative under Donald Trump?
This has been going for 5 years.
Yes, exactly that. This tells us more about post-Brexit and the UK trying to do trade deals all over the place.
It's also, can we even apply the UK to the rest of the world? Because don't we know that Donald Trump is a friendlier, it's kind of that cable or the Brexit premium, if you will. You've seen cable outperform on this idea that maybe they won't get just as hard as the rest of the world. So I don't know if this is a roadmap, but good for, I guess, bullish UK investors.
Yeah, I think it's being seen as being better for the UK than maybe for the United States. The fact that Liz Truss is being talked about a lot in this conversation and the fact that Liz Truss confirmed that most of the details had been done when she was Prime Minister.
Remind us, that was a few years ago,
That was a while ago. Like, it didn't last long, but it was a while ago.
Did she go to the inauguration? I could have sworn that she attended.
Political affinity.
There it is.
What about there are other trade stories, though, that we need to keep an eye on? Or they're not necessarily, we haven't got necessarily the details of them, but there's a lot being talked about in chips and in pharma.
Well, speaking of, I think the through line there is what was under the Biden administration that's being continued or changed up under the current administration. I think the chip policy is really interesting. We know that under Joe Biden, there was a big question of chip grants and exclusions when it comes to what technology can be exported to China. That was then kind of removed, then ramped back up, and now removed again with the potential of being ramped up. And that is what's going on in the Trump administration. Because remember, he did talk about potential AI-related chips, again, exacerbating some of the moves from the Biden policy, but now talking about pulling them back. It was enough to move the markets, even though the overarching theme is we still don't know what they actually look like, but enough positivity that I wonder may show up in the likes of ASML this morning.
I see your positivity, and I raise you some negativity in the pharma sector.
How on brand?
Precisely. What they're talking about now is basically what the Trump administration would like to do with pharma pricing in the United States is basically set it at levels that we see internationally, where prices are lower. So that would bring, obviously, US pricing down. This is Medicaid pricing. That would have a significant impact, and as a result of which we saw some of the pharma stocks overnight coming under quite a lot of pressure. What I think is interesting is the conversation that we had with the AstraZeneca CEO the other day, who basically said, the Europeans have got it wrong and the Americans have got it right. If you want innovation, you have to price this stuff more highly, and as a result of which you are going to see the money coming into the system, and we will see the innovation in the pharma space that everybody wants to see. So coming down to the European level, certainly from a pharma industry point of view, not a good thing.
So I think this raises the question. Both of these sectors, we've seen share prices move on these stories. Are both of those moves misplaced, then, is one of the things we can ask this morning, especially on the chips side, where, as you point out, we don't know what regime the President Trump will want to move to. We have no guarantee that it would be less onerous than the one that is in place right now. So that's one area of focus.
Well, if there is and this might be a stretch, but if I'm on the positivity train, I might as well lean in
American.
Completely.
You can do it. It's fine.
I can't help it. I can't be un-American. But I do have to say that if there is a question of thawing relations with China ahead of this meeting in Switzerland on Saturday, perhaps pulling back on some of the curbs, even temporarily, maybe a tiny olive branch, an olive twig, if you will, when it comes to that meeting and the approach on China. So perhaps that interpreted as a little bit of positivity.
Shall we go to the Fed?
Not
in a hurry.
Let's talk about Powell. I don't want to talk about PSG. I do want to talk about Powell, though. The risks of higher unemployment and higher inflation have risen. There you go. So, unlike the ECB, where basically we have a potentially deflationary scenario, Powell's facing a potentially slower growth environment and a higher inflation environment as a result of tariffs. But again, I come back to the narrative of we don't know.
Yeah.
We're going to wait. Wait. That was the narrative that basically went all the way through. The language didn't change, but he's definitely waiting.
And as expected, not wanting to say very much, it would seem. No closer to understanding the secondary effects of tariff-related inflation on other inflation, and I think that's something we're going to keep watching.
So let me get this straight. The market is pricing in a cut in June. Jay Powell said, no way. Plus increased risks that we don't know how to navigate, and the markets rallied. Explain that logic to me, and I haven't heard one person.
I think the market moved on other things. I'm not sure that Powell moved the market very much.
Fair enough.
Think probably the stories we just talked about actually had a much bigger effect. I think the chip story and the pharma story both had a bigger effect on the market yesterday than Powell did, because I think we largely got what we expected from Powell.
The Fed perhaps not in control of the markets, as has been the norm for so many years. Now, let's talk about what else we've got coming up today. We do have an EU foreign ministers meeting as well, so perhaps some lines coming out of there as well. But then it is central bank palooza, which, of course, did not end with the Federal Reserve yesterday. We've got a Norges rate bank decision at 9 a.m. UK time. I believe we have the Riksbank later today as well, about 8:30 a.m. We're going to be breaking that throughout our show as well. 12:02, very specifically, a BOE rate decision. That delay, I believe, related to a 2-minute moment of silence when it comes out. And I think 1:30 p.m. UK time, some data, U.S. initial jobless claims, plus a 30-year bond auction. Do people want to be exposed to the long end of the U.S. curve right now? We'll find out at 6 p.m. Plus, of course, as I mentioned, the BOE rate decision. We will have live coverage just after 12 p.m. London time for viewers in the UK. A full coverage of the Governor Andrew Bailey's news conference in a special broadcast starting at 12:15 p.m. You can also watch this live on the terminal and on YouTube. And our very own Francine Locke will be speaking to Governor Bailey later today. You can catch that interview from 4 p.m. UK time.
Okay. What have we got coming up for you? We've got some great guests lined up to talk about what is happening in these markets. Always a pleasure. Helen Jules is going to be joining us, BlackRock EMEA CIO for Fundamental Equity. Bruno Scarica is going to be joining us as well, Morgan Stanley's chief UK economist. Two stories to hit there. What impact will the trade deal have? And Anna, What impact will the Bank of England have?
Yeah, absolutely. And Trade is going to run through some of our guest conversations on the earnings stories as well. We'll have some really interesting earnings conversations, a wider state of the global economy conversations, I suppose. Vincent Clerc joins us, Maersk CEO. Waiting in the wings, we'll certainly get into that. Also waiting in the wings, Henrik Andersen, the Vestas CEO. Lots to discuss from a logistics perspective, from an energy perspective. So join us for those conversations. And in the next hour, we will also be hearing from Stefan Hartung, the Bosch CEO. So stay with us for all of those conversations. If you have any questions for our guests, IB plus BBTV Go is the function to use on the Bloomberg terminal. This is Bloomberg. Welcome back. This is the opening trade. We are going to have a series of really important conversations around the earnings stories and what global trade is doing to levels of uncertainty in the global economy right now. We've just had numbers through from Maersk, the global shipping giant. A couple of things catch our eye. Guy was talking about full-year global container trade. The estimate from Maersk is -1% to +4%, so a wide range there. That's bringing down certainly the lower end of that estimate. And they also say that they see Red Sea disruption continuing for the rest of the year. So lots to discuss with Vincent Clerc, who is the CEO of Maersk and joins us now. Vincent, thank you very much for joining us. We were having a conversation with various CEOs over recent days about the level of uncertainty and the inability to plan with a global economy vulnerable to such uncertainty right now. You've given a range for global container trade of -1% to +4%. Tell us how much visibility you really have.
Yeah, that's a really good point, and that's what we spend a lot of time on. We can see in the first quarter that we had a really solid start of the year with an economy that was still strong and a strong demand that continued in the same vein as what we have seen during last year. And then already in the second quarter, a lot of uncertainty following Liberation Day and the rollout of the tariffs in the U.S. So far, what we have seen is this is mostly a U.S.-China issue. The rest of the world continues unabated in the same direction as what we have seen for the past year and a half. But clearly, in the U.S. And in the China relationship, this has already taken a bite in the second quarter in April and will continue in May. And it is something that we need to continue to monitor. Fortunately for us, this represents a fairly small share of what we do in terms of business activity. China-U.S. is 5% of what we do. So even with that impact, actually, as long as the rest of the world stays fairly robust and the trade between the rest of the world stays strong, then we have the possibility to weather this fairly well, which is why also we were able to maintain our guidance despite a lower outlook on volumes.
Vincent, so sticking with that, I know it's only 5% of your business, but US-China is such a focus. How bad has US-China become, and has it plateaued yet? Do you get a sense you've moved to another level and stuck there?
Yeah, so we've seen drops on volumes from 30 to 40% on these corridors, in both directions actually, as the trade war really heated up. This seems to have found a plateau today, but I think what is happening is for a lot of those products, there is no easy substitution outside of China or outside of the US. So what is really going to be interesting to see is how long can each side actually live on the inventories that they have. How much can they substitute from other origins? And also, how much is their demand for the goods going to be affected? If we see inflation as a result of this, obviously this could have an impact on volumes and could increase the chance of recession in the United States. So those are all risks that we're actually closely monitoring because it will have a big impact on how the second part of the year will look like from a volume perspective, hence also the wide range that we're having.
Vincent, we're certainly curious about the R word you just used, the recession. I want to put that on pause for just a moment and ask you specifically about some of the policies that are actually coming out of the States right now, especially when it comes to the likes of ports specifically. There is a question right now of whether or not Donald Trump will put a levy on made-in-China ships specifically when it comes to U.S. ports. Have you had those conversations? Are you preparing for that possibility?
Well, USTR investigation on Section 301 has actually rolled out. There was a first proposal that was actually quite significant, that would have implied quite a significant increase in cost for us. After a phase of consultation, the final proposal, which will actually come into effect 4 to 5 months down the road, we could see that the administration has listened. This is much more measured and is actually something that even when it goes into effect, we can deal with without having to shoulder further cost or having to pass on cost for our customers.
Well, let's stick with the theme of what's happening and some of the rules that are coming out of Washington, D.C. Just this week, Donald Trump has talked about the United States will stop bombing the Houthis in Yemen, something that is a direct repercussion, has ripple effects to the Red Sea as well. Does that mean it's safe enough to travel through the Red Sea again? What does that green light look like to you?
No, our assessment is clearly this is not the case at this stage. First of all, I think the contour of this agreement and exactly what it entails and for how long and what is being covered. Is it only U.S. ships? Is it all ships? Is it a definitive commitment or just a tentative one with a time bar on it? And how committed are both sides to it, I think is still remains to be seen. At the same time, the correlation that there has been between the situation in Yemen and the situation in Gaza has been strong all along. And on the front in Gaza, we don't really see things appeasing. To the contrary, with extra mobilization in Israel and so on, we're actually fearing a worsening of what is already a terrible situation in Gaza and in the West Bank, which might have strong repercussion on the situation in Yemen. And given how comprehensive a redeployment is for us, if we need to sail back through the Red Sea, we really can't do it unless we have, I think, not only the view that this is safe today, but this can also be safe going forward. And those conditions are not there today.
Okay, so lack of visibility on that front. Vestas, good morning. It's Guy. There is this fear in Europe that we're going to see dumping, effectively, product that was going to the United States coming to Europe. Any sign of that?
I think this is a bit too early to say, but it is clearly a risk that all these goods, all this capacity that has been producing and that was basically distributed across the globe, if you will, if they lose one of their key markets, they will look for other outlets to see pickup on these products. It will also possibly mean that actually the prices of goods will be deflationary for a while, because as people look for new markets, there will be price incentives, which could actually trigger this. This is also another thing that we will need to monitor in the coming months. At least so far, what we see is demand into the rest of the world outside China, US, continues to be strong. Whether there is some aspect of that substitution already taking place, it's too early to say, but it is also another factor where there is uncertainty and that we need to continue to monitor.
A lot of uncertainty. Uncertainty seems to be the word. We have some certainty this morning. Within the last few minutes, a UK official confirming that Donald Trump is expected to announce a UK-US deal outline. That's going to come a little bit later on. So the first trade deal potentially coming a little bit later on today. Vincent, just hold on. I've got Henrik Andersen of Vestas sitting next to me here in the studio, and I'm interested to compare and contrast your two different views of what is happening in the world right now. Good morning, Henrik. Your numbers were out a couple of days ago. We'll come to those in just a moment. Vincent has a kind of a front row seat in terms of early visibility on what is happening with global trade. You're a bit further down in terms of seeing the effect that is happening. How much visibility do you have right now? What do you need to know from Vincent in terms of what he's seeing? I'm trying to get a sense of how CEOs are seeing the world right now from different points of view in terms of the industrial supply chain. How do you see it right now, and how different is it to what he sees?
No, but I don't think we are different in that aspect. And I think good morning, Vincent, and I hope you enjoy the morning with the numbers out. You are a partner to us, therefore we often and frequent share views on how this is. And for us, of course, one of the major things, our largest market, single market, is still US. Yeah. And therefore, of course, for us to get corridors in and out of the US is extremely important from a component point of view. Because it's not all components in the world that are localized in the US. But for us, we have more than 5,000 people. Yep. We have factories set up in the US. So for me, the direction of trade between not only Asia to the US, but also back into Europe is very important.
Vincent, just picking up on that point, here's one of your big customers talking about the fact that they are in the same boat, quite literally, as you. But what are your customers telling you? How different are the different groups within your customer base in terms of the information that they have right now and what they're able to tell you and us about what the state of the world looks like from a trade point of view?
Yeah, I think you mentioned before uncertainty as being kind of the key term right now. You can hear this is true for Henrik. It is true for us. It is true for all the customers I've been talking to here in the last few weeks, and I've been talking to quite a few of them to try to make sense of how they are readying themselves, what types of decisions they are doing to their supply chains. Some have adopted a wait-and-see view to see if things are going to resolve themselves, and we're going to get back to something a bit more that looked a bit more like what things were in the first quarters. Others are expecting things to remain as they are and are trying to find different outlets and different structures. But I think this uncertainty, more than the tariff, this uncertainty is paralyzing for a lot of our customers who really, because of this lack of clarity, have a real hard time understanding what the right decision is going to be for them for the long run, given that they have a hard time figuring out what is going to be the reality a week or 2 weeks down the road.
Yeah. Vincent, great stuff. Thank you very much indeed for sharing some time with us this morning and also your numbers. Vincent Clerc, the CEO of Maersk. Let's get back to Henrik. He talks about the uncertainty, and you highlighted in your numbers as well. You talk about the uncertainty that you're currently facing. You have a fairly big footprint, though, in the United States, from a customer base, but also you manufacture there. What are the easy decisions to make right now? There are many hard ones, I'm sure, but what are the easy decisions? Is it to prioritise the United States? Is it to prioritise a shift in the manufacturing? What are you doing in order to get ready for what could be coming?
It's quite interesting, and maybe it comes with age, I don't know, but I'm saying stay calm, because there are some of these things that will be probably spontaneous, probably fast measures that then will try to find solutions on over time. And if I look back and also forward, we have created factories and localization in the US for more than 2 decades. So for somebody to sit here and got a really nerve-wracking Monday morning, and now on Friday we're going to relocate some of it, that's just not the right thing. Because whatever we do, we still see the demand cycle for energy, we still see the building and the ramp-up we are doing in the US, and therefore for that to suddenly be hit by, and I often call it a bit the emotional spirit of this, and if I could encourage still anything out of this, remain a bit calm, take some responsibility, because direction of setting for your organization needed right now, because they get up in the morning, they see news like this, and they all see the world is coming a bit apart, it's being more fragmented. So I think actually as CEOs, one of the most important thing right now is gather your people and to some extent stick to the direction.
And we hear a lot about tariffs. That's where all the noise is right now. But are you hearing any positive things from the US administration? I mean, we hear a lot of negatives around the wind business, for example. What about tax credits under the IRA? Do you keep those? Any positives?
Yeah, no, come on. As I said, we got here, and then as a European, I get up in the morning and I see there's a filter off, and there is a way we would like to portray the US. If I was not a Danish national, I would probably be a US national as much as I've lived in the UK for 7 years. So for me, this is about, come on, let's not try to badmouth or give each other that. There is a bi-party system in the US that changed administration, but there's also both the House and the Senate that works, as always, diligently through legislation, and we shouldn't underestimate that most of the energy policies in the US have been there for 3 decades. So, of course, both houses and Senate are, of course, deeply into discussion of how to progress that. When you then talk about energy dominance in the US, there is a reason why US has energy prices that is up to around a third of the price in Europe, because they have invested cleverly in capacity for 30 years. And we are, excuse the language, goddamn still discussing why energy is not for free in Europe.
Henrik Andersen, we'll leave the conversation there. The CEO of Vestas joining us this morning. We thank you so much. This is Bloomberg.
Welcome back to the opening trade. A lot of earnings out this morning, 30 minutes from the start of European trade. Let's have a look at where we are in the futures picture. And we do have some positivity on these markets. We've got a UK-US trade deal in the offing. That might lift broader sentiment, could lift UK sentiment. But it does seem as if we are going to see some upside at the start of trade. US futures are pointing higher. We factored in the Fed yesterday stateside, of course, but we also have all these trade lines. The market has taken a glass-half-full view of the chip story that we've had here at Bloomberg as well. So that seems to be pushing things around a little bit. Let's have a look at the bond markets then and see where we are there to get a European read. It is Bank of England day, and we're going to get gilts opening in half an hour, and that will be a focus for us later on in programming, what's going on with the UK interest rate story. But for the moment, we are unchanged over in Italy and very little move elsewhere. Kriti?
And that is in contrast, I should say, to about 2 basis point, almost 3 basis point move in the U.S. 10-year. But let's stick to what Anna was talking about there. The Bank of England expected to cut interest rates by a quarter point today. But how does that possible trade deal between the United States and the UK change the path ahead? Of course, we've just heard in the last, I believe, a few minutes, actually, from a UK official that Donald Trump is expected to announce the outline of the U.S. agreement at some point soon, is what we're being told by a UK official. Our UK correspondent Lizzie Burden is going to be analyzing all of this, drinking out of a fire hose, I imagine, joining us outside the BOE. Lizzie, thread the needle for us here in terms of how this potential trade deal affects the BOE.
Well, that was the Defence Secretary John Healey speaking there, Kriti, saying that, yes, the deal is on the table, but not confirming the scope of it, which is really what matters in terms of your question of how much it moves the needle for the Bank of England. I've been texting economists this morning, and they're saying pretty unanimously not much. Why? Because, first of all, they've already voted, and it's highly unlikely that they'll vote again. First of all, because they don't do that for a second time unless they're really in an emergency situation. I'm talking financial crisis level emergencies, but also it's likely that that Trump presser comes after the BOE presser. On top of that, if you look at the economic impact of a US-UK trade deal, it doesn't look like that 10% baseline tariff is on the table for negotiation. So that leaves the 25% tariff on steel and autos. And that doesn't do much potentially to change the impact on the UK from what we were already expecting. Now, look, this trade war is global. That is what Andrew Bailey, the governor, is likely to emphasise today. The elevated uncertainty remains on the table. You could still have lower oil prices because of lower global demand, and we don't know what's going to come out of those US-China trade talks at the weekend. So it could be that you still see the UK, like the rest of Europe, flooded with cheap goods from China in order to circumvent its own tariffs. So really, it looks like the picture is pretty much the same for the BOE.
Lizzie, what are the chances of a 50 basis point cut today? Everybody's expecting 25. If we only get 25, what else do we get?
Put it this way, 20 out of the 32 economists that we surveyed see at least one member of the 9-member Monetary Policy Committee voting for a half-point cut today, Guy. What would be really interesting is if you see not just the Archdove Swati Dhingra voting for a jumbo cut, but also Deputy Governor Dave Ramsden, he's got form pivoting the committee, or maybe the newest member of the MPC, Alan Taylor. And yes, Andrew Bailey has told us don't take the vote split as a dovish signal, but of course the market will if there's more than one voting for a half-point move. Just in terms of that signalling, I would also look at the guidance around this decision, because remember, at the moment they're describing the path ahead as gradual and careful. They added the word careful because they wanted to take account of Trump's tariffs. If they take careful away, perhaps that suggests that the balance of risks is tilted towards a slowdown in growth rather than more inflation. And if they take away gradual, maybe that opens the door to a June cut, and that would be the first back-to-back cut that we've seen here in the UK since COVID, and before that, the financial crisis. So a very different mood potentially here from the Fed last night.
Thank you very much. Our UK correspondent, of course, Lizzie Burden, covering the trade news flow and the Bank of England outside the BOE for us. Now, the Fed has kept rates on hold, as Chair Jerome Powell says he won't be rushed to cut.
In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Near-term measures of inflation expectations have moved up, Survey respondents, including consumers, businesses, and professional forecasters, point to tariffs as the driving factor. For the time being, we're well positioned to wait for greater clarity before considering any adjustments to our policy stance. And so we think that leaves us in a good place to wait and see. We don't think we need to be in a hurry. We think we can be patient.
Jerome Powell there, of course. Let's bring in Bloomberg's Valerie Seitel, who is poring over all the detail, of course, of the Fed. So, Val, patience is a virtue, we understand, and the Fed seems to have it.
Yeah, that's right, Anna. A lot of the same lines repeated in this press conference to his last speech. A lot of this talking about waiting, about patience, saying that that our monetary policy position is well positioned to weather the storm at the moment. I thought there was one line at the very end of his press conference, Anna, that was quite telling, saying that we can afford to be patient. There is no real cost to waiting at this point. Basically saying there is no preemptive cuts coming from the Federal Reserve, and they do not see a risk of falling behind. They are waiting for the evidence to show up in the hard data before doing anything on interest rates. He also had, the same assessment on the U.S. economy as he did in the previous meeting. He still characterized the U.S. economy as solid and said the U.S. Economy is resilient. He did talk about that GDP print that we got last week that came negative for the first time in a few years, and he pointed to something else in arguing that, hey, the U.S. economy is still looking good. He pointed to an indicator called private domestic final purchases, which essentially strips out the effect of all that import surge that we got in the first quarter this year, saying, look, it's running above trend, still 3%, and it's above what we got at the fourth quarter of last year. So the U.S. economy is still looking pretty good. But net-net, the decision yesterday in the press conference did very little to shift the dial on Fed rate cut expectations. We're still expecting 3 cuts by the Federal Reserve by the end of the year, with that next one to come sometime in July.
Valerie, if they wait for the hard data, and hard data by definition is lagging, won't they be late by definition?
Look, when he was asked that question, Guy, he did reiterate that the Fed has moved quickly before and it can move quickly again if the data warrants. That, to me, just says he is pushing out the cuts until later, but they will be willing to be there for the economy. If the data does deteriorate, they can cut quick and fast to aid the U.S. Growth picture.
Valerie, great stuff. They'll be cutting quickly and they'll be cutting fast. Magnitude might matter at that point. We'll see. Valerie Seitel on what we got from the Fed. What else do you need to know this Thursday morning? Pakistan says it reserves the right to retaliate further after India launched what it called targeted strikes on terrorist camps in Pakistani territory. Pakistan's army says 31 civilians were killed in the deepest breach of its territory since the two countries went to war back in '71. India, meanwhile, says it conducted a, quote, precise and restrained response that was designed to be non-escalatory in nature. Black smoke rose from the Sistine Chapel late Wednesday, signalling that the 133 cardinals gathered for the papal conclave do not yet have the two-thirds majority required to appoint the next pontiff. The cardinals are set to return to their deliberations this morning to try and find a pope, a successor, of course, to Pope Francis. And the Chinese President Xi Jinping has arrived in Moscow for the commemorations marking the 80 years since the end of the Second World War. Xi is said to hold bilateral talks with the Russian President, Vladimir Putin, today. Xi's trip comes as Russia and Ukraine continue to strike each other's capitals in their ongoing war. Putin has declared a 3-day ceasefire starting today to coincide with the anniversary of victory over Nazi Germany. Ukraine President Volodymyr Zelensky has called on Russia to accept a 30-day truce instead and hasn't committed to reciprocating the 72-hour ceasefire announced by Vladimir Putin.
One of the things that Russia is saying is that they've been shooting down Ukrainian drones over the last 72 hours that have been heading to Moscow. I mean, that would be big news, of course, given that we have Xi there, as you just said, but we also have the Brazilian leader there in attendance. So there are going to be a number of countries represented, militaries from a number of countries represented, along with Russia, for these 80-year commemorations.
It's a crucial one to watch as well from a markets perspective as well, simply because in the commodity space, we know that oil has been a key, of course, export of Russia specifically to China and to India as well. Relationship with India that is now facing pressure from the United States. So China then becomes the ultimate buyer for Russia, and we'll see if perhaps that's a place where this relationship may show up.
I just think the tone shift in Washington, I think, over the last few days has actually been quite interesting in terms of how both the president and the vice president have been talking about Russia. And the conviction level that a deal can be done seems to be dropping fairly dramatically at the moment.
And whether we end up in a situation with more sanctions as opposed to fewer, which is, as you say, a real tone shift from the start of the Trump administration.
Does this take away something from the European story? I wonder how much has been built into European asset prices over the last few weeks on this anticipation that a deal can be done. The mood music improved for a while. Did that lead to maybe asset prices getting a little bit of a boost?
Yeah.
I know there are other factors, but were you to back away from that, do you see that being reflected?
There were certainly
in markets
days where we talked about that, weren't there, where we saw defence names and other Eastern European names certainly moving on that news flow. But since then, trade, tariffs, more tariffs, and that seems to be what's dominating the thinking.
And dominating not only the market thinking, but, of course, the commentary coming out of CEOs. We've heard from just two this morning, both of which have said, we don't know what's coming down the pike. If you imagine that's going to be a theme throughout this earnings season. Coming up, we're going to dive into another earnings story. Belgian brewer AB InBev beating in the first quarter and holding its outlook. More details in our stocks to watch next. Stick with us. This is Bloomberg.
Morning, welcome back. Thursday morning. European equities are called a little bit higher this morning. Up by a bit. You're going to see some single stock movement, though. There's a lot of single stock names that you're going to want to focus on as we have an awful lot of corporate reporting. Plus, you've also got to fold in the potential trade deal coming between the UK and the United States. Does that move UK assets? You've got a pharma story to digest. You've got a chip story. There's a lot going on this morning. It's going to be really interesting to see how it shakes out. Kriti's, though, focusing on other things. She's going to tell us why deficits matter, Kriti.
Deficits always matter. They especially matter here in Europe, but it doesn't feel like with the trade flow and the news flow and the Federal Reserve changes or potentially not changes, it's really hard to factor in where the deficit concerns actually show up. And this is where, before we get to where we are right now, I want to show you what happened in 2023. So a little bit of a journey back into history, if you will, where deficits really, really mattered. The freak out, if you will, of the third quarter of 2023. I want to show you what happened in the lead up to this, which is really this kind of divergence when it comes to the 10-year yield and the Bloomberg Dollar Index. So really just a pushback between interest rate differentials and how it's moving the currency. So this divergence you're seeing between those two lines is crucial. But since then, we've kind of seen that correlation come back and strengthen. You can see that as these two lines move quite closely in tandem until now, until Liberation Day, where we did see this massive divergence yet again. Now, you would think that that is a trade flow-driven story, and largely that dollar pushback it is. The inflationary impulse, it absolutely is. But the deficit there is creeping into the conversation, especially when we're talking about the inflationary impulse and the concerns around some sort of further sell-off in not only the U.S. dollar, but in the U.S. bond market as well. And that is something where the path, Anna, from 2023 may be a good roadmap.
OK, lessons from history, the link between yields and FX. That's on Kriti's mind this morning. Let us find out what is on the mind of Markets Live Executive Editor Mark Cudmore, who joins us now for the markets in 3 minutes. And Mark, let us start with the possibility of a UK-US trade deal. And I know you've got some pretty strong views on what this does and does not tell us about the wider trade deal narrative.
Yes, good morning, Anna. I think this is a real negative. And the reason I say that, there's three key parts to that, is that everyone is very focused on trade at the moment. It's the big kind of story. What kind of wins will Trump get out of his aggressive tariffs, his reciprocal tariffs, and looking for, kind of negotiations to get concessions? And if this is the big thing that everyone's hoping for to kind of boost markets around, they're going to be extremely disappointed. Why? Well, this deal has been officially negotiated for 5 years now. It started under the prior Trump administration. There's been lots of optimism. And so this is a deal that's nothing to do with reciprocal tariffs. In fact, at the end of February, 5 weeks before those reciprocal tariffs, Trump was already promising this deal was likely to come through very soon. It would be a terrific deal, he said at the time. So this has nothing to do with reciprocal tariffs and is not a win for the latest round of policy. On top of that, this is a country which the US has a trade surplus with. So it's not even one of the trade balance stories it's trying to solve. And it's a relatively small trading partner for the US. So this is not a win in any regard for the current administration's trade policies. And because the market is betting a lot on the fact that either Trump will get some big wins or that there'll be a major kind of rowing back on tariffs, one of those two outcomes is what the market is betting on. Right now, this is going to sorely disappoint those expectations.
So where do we go from here? What does the market now need to keep momentum? The Fed did nothing. The earnings story is fairly mixed, and to be honest, we're talking to a lot of CEOs that are basically just telling us we don't know. What is the next catalyst that you see, Mark, if it's not this trade deal announcement today?
Do you know what? If I'm what I'm worried about, and this is, I should preface this with this is quite speculative because we've nothing concrete. I am worried about what the next. If you've got a bearish stance, I should say worried, not worried in terms of the outcome for markets. But if you're a bearish person now and you're negative as I am, I've kind of returned to the proactively bearish side this week. I wonder what that sovereign wealth fund announcement might do out of the US. That's that kind of tail risk that I can't predict. I don't feel like it is a plan that will have a lot of funding to make a material difference, but the headline risk might be quite notable. So I am worried if you get some kind of announcement that there's a sovereign wealth fund that's going to buy a load of US stocks, for example, with some really grandiose numbers pronounced, even if they don't come to fruition, that is something that might really squeeze the market next. But I can't actually see a real solid, sustainable driver for higher levels in the stock market, just news headlines.
Mark, very quickly, at what point does Jay Powell need to start thinking more seriously about widespread layoffs? How quick is the Fed's reaction function?
I think they will swivel super quickly when the labour market really starts cracking. There's no real signs of that yet. I mean, we can get marginal weakness. That's not the problem. As I said yesterday, I think the Fed will maintain that they're going to be on hold, and then suddenly they're going to swivel and cut really aggressively. When will that point come? Probably sometime in the summer.
OK. Mark Cudmore, Markets Live Executive Editor, thank you very much indeed. You want to get some more news on all of this? MLIV Go is the way that you do that. It's going to be a busy day. There's a lot of corporate earnings to digest, but there's an awful lot of macro news to fold in as well. MLIV Go on your Bloomberg.
Absolutely. Let's go from the macro to the micro and get our stocks to watch with Joe Easton. Joe, walk us through it.
Morning, Kriti. So AB InBev looking really strong in terms of their profit today. The EBITDA numbers on the earnings actually double what analysts were expecting in terms of the growth of around 8% in the last quarter. We did see a bit of a dip down in shares of the maker of Budweiser and Stella Artois last year. But last time they reported back in February, we saw a 10% gain in the stocks. We'll wait to see if we see anything as big as that today. And then we can see analysts really positive, 28 buys, not a single sell rating on that stock, potentially positivity priced in a bit on that one. Then we are also looking at AP Moller Maersk, the company downgrading its forecast for the freight market. A lot of this, of course, tied to the trade war concerns. We can see that stock had a really bad run over the past 3 years, down around 40%. Also, we saw weakness in that stock yesterday, given the latest news on the Red Sea. So potentially, again, it's an area where the market outlook is potentially priced in, but could be a little bit weaker still, given the downgrade to guidance today. Then finally, in the UK, all the focus on the UK, given the trade deal news that's expected later, but also next, out with numbers and actually looking strong in terms of the retailer. The full price sales are better than expected, and that's the key reading from the report. They're not having to do that much discounting in order to keep the sales up, so potentially that could be taken strongly today. That stock has had a decent run. We're up around 33% over the past year, but potentially next, looking strong in UK retail this morning.
Thanks very much. Our equities reporter, Joe Easton, of course, with some of those stocks on the move. Let's have a bit of a focus on, in fact, some of the stories that Joe was just talking about there. One of them standing out to me as worth lingering on, and that is Maersk, because we spoke to the CEO earlier on. And just fascinating, the way he was talking us through exactly where they're seeing reduced volumes in global shipping, and it is very much focused on that US-China route. Only 5% of the business, he says, so trying to downplay the relevance to their company. But in terms of big macro pictures, he gave us numbers as to how much weaker that particular route is, but saying that the rest of the world isn't actually suffering too much right now.
But is that a lag that we're waiting for, though? And in the previous iteration of this trade war between the U.S. and China, Europe, South America, Africa inevitably gets dragged into it. Are we just waiting for that to show up?
Yeah, it's going to be interesting to see do we see some of this stuff coming to Europe? He didn't know yet. He thought that was too early. That's the disinflationary impact that maybe the Bank of England and the ECB are going to be worried about. In terms of what else we've learned this morning, Puma out this morning with its numbers. We'll see how that stock reacts. It's maintained its full-year guidance, full-year sales guidance, I think. And it's going to be fascinating to see what is the right strategy at the moment. Is it to say, we're going to stick with our guidance, but we don't know? so which a lot of companies are doing right now, or is it to say, we're going to take a hit on this and we're going to downgrade our numbers, which is what Infineon has effectively done this morning. Spoke to the CFO a little bit earlier on. They're making a guesstimate and they're plugging that guesstimate in some ways to their numbers, which is the right strategy in terms of the way that the market is going to be reacting. I think
and how can you compare the guidance across companies, across sectors?
Yeah.
If even within the same sector they might be coming to different conclusions about the level of certainty they have, about what things are going to look like, and therefore whether they move away from previous guidance and onto some new kind of territory. It's really difficult to compare what these businesses are saying.
There's another unknown in here as well, which is the foreign exchange story, which Infineon was flagging. So they take for every cent the euro moves, they think that they take a 25 million euro hit in terms of their revenue line. So they're able to actually quantify the impact that a shift in their numbers in the foreign exchange market has in terms of their numbers, because obviously they've got a big US business. So they're able to see that. So I was like, so we go to 120. He's like, yeah, that's how much it's going to cost us. You go to 130. That's how much it's going. They can see what see what the story is. So it's good. So you've not only got the uncertainty around trade, but you've also got the uncertainty about what's happening with the dollar right now, and that's beginning to show up as well in some of these European numbers and what they're reporting and what they're telling us about how they see the outlook.
It quite literally does not pay to be an international company right now and have that exposure. That is a complete sea change from what we've heard in the past, where of course globalization has been not only a competitive economically, but also profitable and monetarily helpful. There's one more stock I want to keep an eye on here, and that is Banco Sabadell as well. This is, I think, a crucial one. Of course, we cover BBVA's takeover bid for them quite substantially. Sabadell has really been pushing to try to show they can not only meet shareholder demands, but actually show up with like the buybacks, the dividends, that they don't need the money and the takeover bid coming from BBVA. They beat on their first quarter net income. We spoke to the CEO in the last hour with Tom McKenzie. That deal story is heating up very, very quickly.
OK, our top story this morning, waiting for that trade deal between the UK and the US then. How much detail will we get around it? That'll be a story later on. In the meantime, market's about to open up. The pound is now flat. This is Bloomberg.
Welcome back. Thursday morning. There's a lot going on again today. There's a whole load of corporate news that we need to fold into the narrative. You've got, obviously, this trade deal that Anna was mentioning just a moment ago that could get outlined a little bit later on with the UK and the United States. Does that have an effect on the FTSE 100? Plus, you've also got Powell to factor in. There's a lot to think about. This chart, I think, therefore, is a little bit useful. It does fold in some of the Powell stuff. It does fold in some of the chip stuff, some of the pharma stuff that we also need to focus on as well today. So this is where we went out in Europe. The market actually rallied a little bit in the United States after that. So maybe a little bit of a tailwind for European futures this morning, Kriti.
Yeah, perhaps a catch-up trade showing up in these markets. Eurostoxx 50 futures higher by about 0.6%. The clear outperformer on the continent, despite it feels like the main story being, of course, that trade deal or potential trade deal coming down the pipe from the US and the UK. Nevertheless, 0.5% gains for the FTSE 100 from the futures picture, but outperformance as well on the continent in Germany. A lot of that, Anna, the earnings are firmly in focus.
Yeah, earnings are in focus, and you take us to Germany. So let's start with Infineon. We've heard from them, of course, guiding lower a little bit in terms of their performance. FX getting a mention as well, as Guy was telling us a little earlier in the programme. Chip stocks representing Infineon and the wider chip space, because, of course, we've also heard our reporting telling us that President Trump is considering getting rid of the chip export regulations that the Biden administration has, even if we're not quite sure what he's going to replace them with. Will it be easier or tougher? Chip stocks in the US rallied on the expectation it could be easier. Maersk is in focus as well, the global shipper, downgrading the global container volume estimate for the full year. Also downplaying Red Sea optimism, which is interesting. That moved the shares lower yesterday. And Puma in focus as well. They're keeping their guidance, but, of course, that excludes any impact of tariffs, Guy.
Yeah, that seems to be the story. Which way do you go? OK, here we go. Start of the trading picture for Europe this morning. What do we focus on here today? Is it the trade narrative? Is it the trade deals? Is it the single stocks? Is it what is happening with some of the bigger picture sectoral stories? What's happening in pharma? What's happening in the chip space? FTSE 100 is up a little bit this morning. We're up by 0.2%. The IBEX is down a little bit. Net, when it comes to the indices here in Europe, I don't think we're going to see much movement. There's a lot of kind of differing forces at play here, but do they pull in the same direction and move the market in one direction, or do they pull apart and therefore maybe the market actually at a headline level doesn't move very much? CAC's up by 0.3%, FTSE's up by 0.3%. No discernible UK trade story, therefore, to be seen in the FTSE 100 versus the French market or the Stock 600. Now, IBEX is a little bit weaker, which I think is interesting. We'll wait for the DAX to open up. I think Rheinmetall could be a story that we're going to be focusing on as well. We've got, obviously, Infineon to look at and Puma in that market. So I suspect it may take a little while for the German market to get going this morning, Kriti.
Absolutely. When you look underneath the hood, as we await some of that German volume to pop up, I think the contributions and your biggest weight to the upside and downside tell you the story this morning. And we discussed it at the top of our show. ASML is your biggest index contributor, higher by about 2.4% this morning. Novo Nordisk is your biggest dropper. Now, this is not a uncommon story. These are two major heavyweights. But the fact, Anna, that chips and tech seem to be leading, this is in the context perhaps of the chip curbs, however temporary they may be from the United States. But then also, I think IDUs has spoken about this as well, the pharma story in the U.S., perhaps Novo Nordisk taking a page out of that playbook, despite its
Astra's down as well.
Exactly. So healthcare on the back foot, perhaps following that lead.
Yeah, Astra, Roche, Novartis, all down this morning. So it does look as if we are seeing a feed across from that idea that maybe Trump wants to lower Medicaid drug prices. And that's feeding into what we're seeing here in Europe as well this morning.
Yeah, and that'll be the second day in a row we've seen big moves on some of these big pharma names as a result of news flow coming out of the United States and the Trump administration. Quick word on ex-divs, because we have quite a few ex-div. I was confused for a moment by what was going on in the auto space, but Maersk is ex-div and Renault ex-div, so let's keep that in mind when we look at what's going on in autos. But to your point, Kriti, it is the technology sector that's doing OK this morning, and some of that will reflect that chip story out of the United States. I still find that amazing that chips rally on the back of expectations of a change in chip export policy from the United States. We don't know what it's going to be replaced with, and it's hard to imagine that that President Trump is going to rip up Biden's rules and allow all chips to go to China.
That is a tough thought to swallow. But look, timing is everything here. We don't know what the temporary reprieve may actually look like. We should also mention that I think one of the top kind of volume movers this morning is AB InBev. So we've got one eye firmly on that as well, higher by 3.8%. Some of their earnings offsetting volume issues that they've been dealing with. But look, there's a lot to digest here, from the geopolitics, dare I say the Federal Reserve as well. Who better to bring it all together? Helen Jewell, who is the CIO for Fundamental Equities at BlackRock, joins us around the table. Helen, a pleasure to have you on the program, as always. What do we do here with trade deals, with Fed policy, with the kind of domestic policy coming out of the States? This morning, from a market perspective, it feels like it's the domestic policy in the States that's moving European stocks more. Is that a misstep? Is that a fluke?
Yeah, great to be here as always, especially on a day like today where there's so much going on. For me, the starting point is always looking at the things that we do know. And so the earnings is always where I start. Now, it has been a really quite strong earnings season, and I know earnings is backwards looking. It's Q1, but the earnings season was very strong, both in the US and in Europe. The important thing about the earnings season, a lot of that was driven by margins, and that is really important for the amount of capacity that some companies, some sectors, not every single one, have to absorb some of the narrative that we're hearing. Now, in terms of then second-guessing where things may line up, we're seeing quite a lot of intraday moves. We're seeing it already this morning. But for long-term investing, I think we have to kind of ignore that part of the noise and just focus on the facts. And at the moment, there is, again, this real resilience in earnings. Yes, some nervousness around guidance, but we're starting from a point of resilience, and that's really important to remember.
So when you're going through these earnings reports, and we've been talking about this around the table, just the verbatim that is being used across these companies, the word guesstimate was used for Infineon, for example, this morning. We're hearing BMW come out and talking about baking their assumptions on tariff reductions by July. That was the conversation yesterday. When you talk about the verbiage that is perhaps creating confidence for investors, what does that look like from an earnings point of view?
So the thing that we're always looking at is where is there less certainty in the market? And there has certainly become less certainty in this market. I am nervous about the multiple. It's something that I'm talking a lot about. It seems incredible to me that markets are pretty much where they were the day before Liberation Day, which is the day that I was last here, funnily enough. It's pretty much, if you look at it, if you were here and then here, it would look like nothing has happened in the last kind of 5 weeks. However, when you actually look at the earnings numbers, yes, there is some nervousness, but companies have been very good at setting out where they see scenarios. They've actually been very good, as Guy said this morning, at really putting scenarios around what might happen. And for us as investors, that's actually quite useful because you can map out likelihood, you can put some probability around those earnings, and that actually gives you some robustness to hang your estimates around. The multiple, however, is where I still can't quite understand why we haven't seen some kind of derating given the level of uncertainty that we're seeing. And that's something from a puzzling perspective that I'm trying to really understand. Now, that maybe is because there's an expectation of rate cuts coming down, and rate cuts coming down is relatively a good thing for multiples. But that's the bit that's really puzzling me at the moment, more than necessarily really trying to navigate too much in the earnings piece.
So where do you see so the European discount? Is it still historically high, Helen? Is it still? Is there still further to run, I suppose, on that European trade?
Yeah, so the discount is still much higher than relative. So relative and historic, it's around 20. It's running about 35%. We got to 45% last year. So there still is potentially further to go in the discount. But the absolute level looks pretty full. It's about 14 times. That's around the historic average for Europe. It's more that the US is still slightly higher than what you expect from historic average. So it's not that the Europe is cheap per se, but the discount is wide. The area that is relatively low, and we must talk about today, is the UK. The UK is still trading at a discount. We've obviously got potentially trade cuts, trade negotiations coming through today, and likely rate cuts as well today. I was listening to Guy, and I'm kind of confident.
Don't do that. Never do that. Ever do that.
And I haven't got my screen in front of me, so the FTSE 100 is maybe not where we should be looking for that, but the FTSE 250, exactly. Now, I haven't got my screen, you guys have, and you're probably about to tell me that the 250 is down. But the 250 is perhaps more likely where you will see benefits of any trade negotiation and rate cuts coming
Well,
through.
it's up 0.5% versus the FTSE 100 up 0.2%, Helen, so you win.
Well, I mean, let's see where it goes today. But the FTSE 250 has been at such a discount. Small cap names trading at the UK at 5-6 times. A rate cut with trade. I mean, let's not forget the FTSE 100 is a big services index. So how much can it really benefit anyway?
Yep.
We said it was a beneficiary of not being part of it. We can't have it both ways and now say it's a winner if we see the trades coming through. But I think the catalyst of Bank of England, and if what we're hearing is right and it is the UK, maybe we'll take people to have a relook at the UK, and the UK is trading at a real discount to Europe and the US.
It's interesting to see the component parts, actually. Aston Martin up, one of the car companies that will potentially benefit from a trade deal coming through. I know JLR have recently restarted shipments going out to the United States. Defender, etc., are selling really well out there. To Aston up, Renshaw's up, Harbour Energy is also trading a little bit higher. I just want to draw everybody's attention to what we're showing on the screen as well, just to give you an awareness of what you are seeing on the screen in front of you. That obviously is the Kremlin. Xi, Putin, the summit is taking place. This obviously marking the anniversary, the 80th anniversary of the end of hostilities at the end of the Second World War. But this is obviously a pivotal moment as well for current conflicts as we see how these two are going to interact, both on the trade front, but also in terms of how solid their relationship is around Ukraine and other issues that are currently dominating the geopolitical agenda as well. We will continue to monitor what is happening with this and bring you any headlines, but certainly the pictures coming out of the Kremlin, just worth a moment and a little bit of a pause, just to take a look at what we are seeing there. Helen, let me come back to you on the markets as well and talk a little bit about another aspect that I've been hearing about this morning, and that is foreign exchange. The euro has appreciated. I was talking to the Infineon CFO first thing this morning. They've plugged in, they used to plug in 105 to their numbers. They're now plugging in, I think, 112.50 into their numbers. There's upside potential for euro-dollar. He was telling me that in terms of their revenue line, it's a 25 million hit every time you see a 1 cent move in terms of the euro-dollar exchange rate. Is this an easier thing to calculate? Is this an easier thing for investors to fold in? If we assume, and many of the foreign exchange people that join us around this table this morning are assuming, that we see a stronger euro going forward.
Yeah, so I mean, I think where we look at this is it's not trying to get the exact number, but it's looking at those companies that are most exposed, exactly. So what's really important when you think about what's happened in the European market year to date is it's been the domestic players that have basically won, both because of the trade, but also because of that strengthening US dollar, the weakening US dollar and the strengthening euro. That is how we kind of look at this. This isn't about trying to work out exactly what that number is going to be. It is saying which are the companies that are least exposed to these kind of FX implications. And that is why I think another reason that we are seeing a lot more of these domestic players are the ones that are winning. In the infrastructure space, infra's done very well. Of course, defence has done very well. We've seen it in European banks. They are the ones that are winning year to date. So a lot of people will say to me, you know, yes, you must be really happy. Europe have done really well versus the US year to date. Actually, in terms of portfolio positioning, unless you are positioned for those domestically facing companies, you actually haven't necessarily had a great year to date. So that's how we think about it. We don't try and get the point right. It's the direction. It's understanding the exposure.
But to that wider point about how indices have performed, if you're a US investor, the DAX is up 27% year to date. For a domestic investor, it's up by 17%. The IBEX is up by 26%. Does the euro just encourage and turbocharge a move out of the United States by US investors, by other investors into Europe?
So you would think so, wouldn't you?
Yeah.
I mean, on paper, that should absolutely be the case, but that isn't actually what we've been seeing so far. The narrative very much has been, for European investors that we speak to, over 50% of them are planning to increase their allocations into Europe. You ask the same question of US investors, you get quite a different answer. It's more like 20%, even though that dollar story means that you would think it was something slightly different. Yeah. That is something that is puzzling to me. We're certainly hearing a bit more of a out-of-US story from US investors, making sure they dial down any overweights. But we're not necessarily seeing at the moment from US investors the kind of flows into Europe that I would anticipate seeing. Now, if we see the euro continue to increase and strengthen, I would think that has to change. And again, that might be another catalyst. But I'm going to be honest with you, Guy, we're not seeing it really in any shape or volume at the moment.
Helen, great to see you.
Great
Thank you very much indeed.
Thank you, Guy.
Always a pleasure. Helen Jewell, always joining us on an exciting day. EMEA CIO for fundamental equities over at BlackRock. Call 6 looks like this. Let's just talk you through what we're seeing in some of the bigger moves that we are seeing around Europe. As you can see, a broadly positive picture. Some weakness in pharma, though. That is interesting, given what we saw overnight out of the United States as well. Joe's got more. Plenty to talk about this morning. What do you got?
So AB InBev looking really strong out of the gates this morning over in Belgium. The company reporting much better than expected earnings, actually around double what analysts were expecting in terms of the earnings growth. The company pushing its drinking client base towards the premium brands, according to analysts today. That's where the growth is in the premium beers, but also the general beers like Budweiser, Stella, not looking too bad either for that one. Then in terms of AP Moller Maersk, that one was a little bit volatile in the open, was actually marginally higher, but now significantly lower. The company downgrading its outlook for the container market. It was actually, last time it reported, expecting a little bit of growth, now saying that it could be a year where we see a decline in the outlook for the container market. So that is weighing on stock, already down significantly, of course, this year, given the trade impact. Then over in UK retail next, holding up pretty strong. They are saying that their full price sales is where they are doing well at the moment. So not having to do discounts to get us all into the shop, get us all spending. They are saying their full prices in terms of their products doing well at the moment. So next gaining around 1.6% in London this morning. Then in terms of chips, it's a mixed one in terms of the sector today, but Infineon actually gaining. So we're up around 1.4%. That one was actually called a little bit lower. So essentially this is the broader impact coming from this news in the US of the Trump administration potentially going to rescind some of these Biden-era curbs on the sectors. That does seem to be counteracting the weakness in Infineon today. I also saw ASML was a little bit higher earlier, as we saw on the previous screen from Guy as well. Then in terms of Siemens Energy, another green one on the screen. Lots of green in terms of the earnings today. Siemens Energy looking strong on the power unit and also the renewables business as well. But a lot of this is focusing on data centres at the moment. We've seen weakness in the sector given concern around cutbacks in CapEx on data centres, but potentially a bit of a relief rally for that one today. Then finally, we will finish on pharma. Another negative day today. There we've got Astra, Glaxo coming down, some of the other stocks as well. Now this coming, of course, on the news that has been discussed on the show already in terms of potentially Medicare pricing in focus in the US. Trump potentially looking to rein in the prices, according to a report that was in Politico last night. Another negative day 4 pharmaceuticals given the sell-off yesterday. AstraZeneca leading the clients, down 1.6% in London today.
Joe, thank you very much. Joe Easton from our equities team. Coming up on the programme, German appliances giant Bosch releases its full-year earnings and warns of turbulence ahead. We will speak to the CEO next. This is Bloomberg.
"18 minutes into the European session, we focus on what is happening in Moscow, where we have the Vladimir Putin, Xi Jinping meeting taking place. As you can see, they are now in the room on either side of the table. The Russians are on the left, the Chinese are on the right. I'm not talking ideologically here, of course, but that is what we are seeing at the moment. Some commentary coming through from Vladimir Putin. This is a critical meeting. Ostensibly, they are here to commemorate, celebrate the end of the Second World War. But obviously, this is a critical meeting in terms of how these two fit together economically and in terms of the geopolitical narrative that we see, how that develops going forward from here. They've talked in the past about how strong their ties are. Are those ties as strong as they once were? We will continue to monitor what is happening at the Kremlin and continue to keep you updated with that story. But let's return now to what is happening on the corporate front, and the corporate front in Germany, which is very much front and centre this morning. The German appliances giant Bosch is reporting a 1.4% drop in sales for last year. It's warning challenges this year due to, quote, global turbulence. The company's CEO, Stefan Hartung, joins us now. Stefan, good morning. Thank you very much indeed. It's a great pleasure to speak with you today. You're still aiming, and I'm reading from your statement here this morning, you are still aiming for a margin target of 7% in 2026. But you see this as extremely challenging, extremely challenging task in view of the global upheaval and, above all, significantly stronger competition that you are seeing out of Asia. Stefan, how much visibility do you have right now in order to set targets for the business, given the uncertainty that we see around the world?
Yeah, thank you for having me on the show. I mean, obviously, after 24, we are all a bit more humble. 24, we thought we are having a year where we see the turning point of all the economies in the end of the year, but we had to realize that's not coming. So 24, we got no growth. We got a shrinking situation for us, minus 1.4%. 25 now again, we had a good start, so good momentum. All the strategies are in place for growth, for technology, for the markets, great offering. On the other hand, we have to be cautious because we know there is uncertainties in the markets. There is not yet the full momentum there. And hopefully this year we will see at the end of the year the turning points of economies like industry, like automotive, like also appliances for the consumer goods. And that's giving me actually strategically a clear backing that our focus on technology and offering is right. However, we have to be cautious that we don't overestimate our luck.
Okay. Let's not overestimate our luck. That's probably a good starting point. Be humble. Stefan, how are you dealing with the tariff story? What are you doing? How do you think about it? How are you manoeuvring Bosch around this story? How's it affecting you now? Is it affecting you now?
Now, the tariffs are obviously transactional costs that are hindering trade movements around the world if they come. And therefore, tariff changes, wherever they come from, whoever is putting tariff policies into place, are significant to us. On the other hand, we have to be very cautious that we don't take every announcement for something that stays forever. We have to wait and see what actually takes place and how it's having effect. Therefore, I see it very much in a position that I don't overact on this. I don't over-exaggerate the effects. I rather see what is the conditions I'm in right now, what can I do, how can I also contribute to making transparent what the consequences are, how can we do the right steps? And by the way, we always have been a global position company with local for local activities. That also plays a bit into our pocket that we have this strategy. But let's be honest, world trade is always good for us.
Stefan, when we're talking about navigating the tariff story, as you mentioned, how much visibility or flexibility do you have to absorb the costs yourself as opposed to pass them on to some of your customers? Have you talked about that? And what does that relationship right now with your customers look like in terms of passing on those costs?
Well, that's one of the major questions. It depends on how sustainable the situation is on tariffs. So if the tariff stays, then obviously you have to move and see where actually it's covered, because you can't just cover it yourself. On the other hand, you have not over jump to it. So if you act too fast and too fast acted on prices, for example, then you destroy demand, and that would also be a problem in the situation. Therefore, it's something you have to be cautious. You have to talk to your customers, and the professional business is different than the consumer goods. And in every market and every situation, that's different. So it's pretty much a tactical thing right now. It may become a strategic thing, but so far for me, the strategic guidelines for the companies, so invest on AI-related technologies, invest on, for example, silicon carbide in the US, buying companies like Johnson, Hitachi, the home HVAC business in the US. These strategic directions stay the same wherever the tariffs go. That's in this way unrelated.
I heard you talk about investing in the United States. Expand on us for us, if you can, around those plans and what that looks like. A lot of your peers, and a lot of course, CEOs in Europe are looking at these tariffs down the pike and saying, we need to invest in our manufacturing capability and basically lean into the Build in America story. Stefan, are you hopping on that train of thinking? And if so, how expensive can that get, and how quickly?
Well, we have been there before, because we have a good footprint in the US. We have also a substantial footprint in Mexico. So therefore, the Mexico-US trade relationship is very important also to us for the whole automotive industry. But we're also having already before initiated big investments in the US, like, for example, the silicon carbide fab we are investing in California. Like, for example, the investment into companies. We bought multiple companies in the US. The biggest one is the $8 billion acquisition we want to close this year for the HVAC business of Hitachi and Johnson Controls. And we are investing, or spending, you could say, in consumer awareness. So we have started a Super Bowl campaign, first time, to sponsor our consumer business, because, let's be very honest, the US consumer is a primary market for the world, whatever it takes. So it's very important for us to be represented and well represented in the US.
Stefan, just briefly, you say global, trade is good for you, even if you have been local for local. If we are in a less globalized world, though, to Kriti's point, how much more expensive is a less globalized world?
Well, that's hard to say. The problem is that if it's less globalized, it's probably a bit smaller, because the markets will shrink a bit. And that's actually something which you don't want to do. And obviously, you don't want to have double work. The double work would be on the development side. The shrinking of markets is actually something you don't want to see. So therefore, I also believe very much in trade relationships and in actually trade acts. So there will be, I think, we will see the first deals made in hopefully this week, and then on the next weeks, hopefully more. So at this point then, when the trade deals are done, then we will see what the final situation is. And I believe in many areas, the world will fully collaborate and have a bit different conditions, because let's be honest, there has to be a level playing field. That's also important for us as a company. And that has to be sorted out by politics. So then we can see exactly what is the situation.
Stefan, thank you very much. Thanks for your time. Stefan Hartung, the CEO of Bosch. Coming up on the programme, we will pivot back to some of our top stories this morning, where, and in fact, the monetary policy and the trade outlook come together, because the Bank of England is expected to cut rates today. But could a potential US-UK trade deal have any impact on their thinking? Maybe not for today's meeting, but in terms of the outlook they give us, they probably know as little as everybody else does about what is in this broad framework between the US and the UK. We'll get back to that conversation, though, shortly. This is Bloomberg.
Welcome back to the opening trade. Some breaking lines crossing the Bloomberg terminal at the moment. Sweden's Riksbank leaving the policy rate at 2.25%. The estimate was, as expected, to leave it unchanged. The content here is crucial, though, because, of course, in just about 30 minutes' time, we're going to hear from Norges Bank itself, which is also dealing with the same policy uncertainty that the Riksbank is talking about as well. Right off the bat, the Swedish central bank is talking about a slight easing of monetary policy going forward, something Bloomberg Economics had predicted as well. But remember, the Riksbank has cut quite a bit recently in a way that its peer, its Scandinavian peer, Norges Bank, has not. So we'll see what the kind of the line is and the commentary is from both these banks in about 30 minutes' time.
Yeah, interesting from the Riksbank then. Inflation yesterday coming in below estimates at a 14-month high, though. So interesting that we get this. Still no change from them. Let's pivot from the Riksbank to the Bank of England. The BOE is expected to cut interest rates by a quarter point today. Our UK correspondent Lizzie Burden joins us now from outside the BOE. A lot to talk about this morning. Things we foresaw yesterday and things that are a little newer on the agenda. Lizzie, could a potential trade deal between the UK and the US, much talked about overnight, could that move the needle for the BOE, and over what timescale?
We'll spare a thought for Andrew Bailey having to deal with this spanner in the works, Anna. But I've been speaking to economists this morning and they say it probably won't move the needle much for the Bank of England. First of all, because they've already voted when it comes to this decision. But further out, the picture doesn't change much. It doesn't look like that 10% baseline tariff is on the table for this deal, though we're yet to see the scope of it. Even if they got this 25% tariff on steel and autos removed, it's still an elevated uncertainty environment globally, and that means that you've got lower global demand, lower oil prices, disinflationary, and unless this deal opens the door to more deals, especially one with the US and China, that remains the case. You could still have China dumping Europe, and the UK included in that, with cheap goods, disinflationary. So it remains the case that Trump's tariff war is set to, and there's a growing consensus about this, hamper growth and inflation here in the UK. Hence why it's fully priced, unanimously expected by economists that we get a quarter point cut. The focus is on the signalling around it. Do we get at least one member of the Monetary Policy Committee voting for a half-point move today? And when you look at the guidance, do they drop the language that the rate path ahead is gradual and careful? If they drop gradual, it could signal that we're on the path to a June cut as well, and that would be the first back-to-back cut since COVID and the financial crisis before that. A very, very different mood music from what we heard from the Fed last night.
Lizzie, thank you very much. Our UK correspondent, Lizzie Burden, there. And nodding as we were listening to Lizzie, our guest on set, Bruna Skarika, UK economist at Morgan Stanley. Finding something at least to agree on there, Bruna. Let's deal with the trade news. I mean, none of us can know exactly. We don't know what's in this trade deal, or is it even a trade deal? Is it just some sort of loose framework outline? We'll have to wait and see. But what will you be watching out for that'll make a difference to the way that the UK economy performs?
Sure. So as Lizzie was saying, I think one thing to look out for is what happens to the baseline tariff. The expectation, I think, is that the 10% remains, which is still higher than the average effective tariff on UK imports into the US prior to, quote-unquote, Liberation Day, which was around 3%. And then I think there's an additional uncertainty around what exactly happens with the auto sector, whether we're talking about a reduction in that 25% tariff or whether it's a quota system where a certain proportion of imports are introduced under a lower tariff and obviously the rest under 25%. Yeah. So that can make a bit of a difference as well.
Can we really call it a trade deal if we see cementing of higher trade tariffs than were in existence 6 months ago? I mean, that doesn't sound like what the trade deal was supposed to be about 5 years ago.
Well, sure. I mean, the U.S. trade policy has shifted a fair bit since 5 years ago. So I think the UK here is trying to really push for a best possible outcome within the framework of this new trade policy and the new U.S. administration. I think it will be interesting to see what happens on the services front as well. Obviously, on Liberation Day itself, services were not in scope of any announcements, but recently President Trump has talked about tariffs on film as well. And it's really the services sector that is important for the UK, of course, about 2% of GDP, services trade surplus with the US. So it's important to monitor that as well moving forward.
The Fed's in a bit of a bind. It's worrying about inflation and it's worrying about employment and basically growth. And it's got a risk to the growth side and it's got an upside risk to the inflation side. What's the inflation outlook in the UK looking like at the moment? How challenging will that be for the Bank of England?
Well, it's looking much better than about 3 to 4 months ago. So one thing that we're expecting today is for the Bank of England to meaningfully reduce their inflation forecast in the very near term. So where at the February meeting, for example, we were talking about inflation peaking close to 4% in the third quarter this year, we actually think they'll be forecasting something around 3% into year end and potentially 2% for this time next year. And that's all oil and gas. So that's how that kind of slowdown in global growth features in inflation.
Okay, so we park inflation to one side. Inflation's now going to be behaved. We can take that, because that was a big risk for the Bank of England, that we stayed with sticky inflation. Is there therefore an argument that you want to go more aggressively at this point? If you don't want to worry about inflation and you do need to worry about growth, is there an argument, which I suspect the Fed would like to do at the moment but can't, focus more on growth and actually deliver some fairly big cuts at this point and reduce rates fairly quickly? Are we at that point where you actually need to deliver those bigger cuts?
Well, certainly, I think the broader context matters. I mean, we just saw Riksbank, for example, remaining on hold, but they had cut quite a lot.
Yeah.
So the Bank of England has really cut less than its peers. We're talking about very restrictive monetary policy. And there is a question to be asked about, really, do we need to stay this restrictive if the slowdown in global growth will do a little bit of that heavy lifting in terms of reopening the output gap and allowing for that sustained inflation at 2% target? So I think the question is definitely there to be asked. And I think a couple of MPC members today, their answer will be, actually, we should be a bit more aggressive. And I think 2 members at least could vote for a 50 basis point cut.
How much of that heavy lifting, as you put it, is being done by the markets, and specifically not just the volatility over in the States, but this giant move you're seeing in cable that's staying above, I believe, 133, the move that you're seeing in gilts as well? How much of that is doing the work for Andrew Bailey?
Well, there's a lot of moving parts, of course. There's obviously the commodities price complex. Then we have cable, as you rightly mentioned. I mean, sterling effective exchange rate is up since the February meeting as well. We're a small open economy. The FX pass-through to inflation is quite large, certainly larger than in the euro area. But of course, we did have a pretty big repricing in the bank rate as well. So I do think that when it comes to growth revisions, we do think growth is going to be downgraded in this set of forecasts, but perhaps not as aggressively as most think, because ultimately you did have about 40 basis points of repricing in the front end of the UK market, which obviously helps growth 2 and 3 years down the line. Yeah, absolutely.
So Guy mentioned the predicament of the Federal Reserve right now, and there's a question. And I think this question has been around for some time, but especially in the last 24 hours, which is how quickly can the Federal Reserve pivot? Should they need to make a real sea change in their commentary? How quickly can they react? Something that the BOE has historically been very good at in being reactive. Talk to us about what that secondhand ripple effect looks like. If the Federal Reserve changes tune, how affected is the BOE?
I mean, I do think that it is a different kind of state of the world, because over in the US, we are talking about them introducing tariffs. It's a bit like a supply side shock. So you're stuck with higher inflation and slowing growth. So that's exactly what Chair Powell talked about yesterday. So the risks to the mandate are to the both sides. So higher unemployment, higher inflation as well. In the UK, my view is that this is purely a disinflationary shock for the UK. So we're talking about a hit to demand. We're talking about potentially lower inflation, not just from commodities prices, wider output gap, but also, as Lizzie mentioned earlier, potential dumping of China goods into the UK. And so in that sense, I think the Bank of England themselves can be a bit faster in cutting rates than the Fed. Indeed, Morgan Stanley's house call for this year is for no cuts from the Fed, which is obviously very out of sync with where the market pricing is for the Fed.
Bruna, back to where we started the conversation, and specifically today on the Bank of England, I'm going to be hosting some special programming, of course, around the Bank of England announcement. Help me understand, gradual and careful, how I should interpret their presence or absence.
Yeah, absolutely. Gradual, careful, cautious. So the February guidance was quite an interesting one. So I think what external member Taylor said at the Treasury Select Committee, he said, well, the way the markets understand gradual is as, 125 basis point cut per quarter. And I think that's certainly how the average market participant takes it. For the Bank of England, perhaps that might mean we're not really looking to do sizable cuts. We're looking to be fairly, careful. So
it means not June.
In terms of, well, I would say that that's how the market would certainly understand it. If that guidance remains in place, I do think the pricing for June would come down in terms of the odds of a cut.
Okay. Bruna, thank you very much. Bruna Skarica, UK economist at Morgan Stanley.
OK, what do we got coming up for you? We're going to return to the corporate news. We're going to return to Germany. The German chipmaker Infineon cutting its outlook, blaming tariffs uncertainty. It's also got an FX story to fold in as well. My conversation with the CFO next. This is Bloomberg.
Welcome back to the opening trade. About 43 minutes into today's session, green on the screen across the board. Outperformance in the DAX, higher by 0.7%. Now, that's largely going to be an earnings story. We've seen some decent numbers coming across the board, despite one key theme, which is simply this. People are worried. We don't know what the future looks like. And yet, positivity, beats across the board.
Yeah, there's some interesting corporate stories that I think are really nuanced this morning. Infineon is definitely one of them. So Infineon stock is up by 2.43 this morning. Let's call it 2.3%. The reason for that is actually, I think, probably more to do with what we're getting out of the United States than rather what we're necessarily getting out of what the German chipmaker is telling us this morning, because Infineon has cut its outlook. Basically, it's warning of a potential hit from tariffs. It doesn't know, but it's kind of folding those into its numbers. It's also flagging as well some fairly significant currency fluctuations. So let's talk about the kind of the former rather than latter. We'll come back to the latter in just a moment. Let's talk about the trade impact on Infineon and what is happening with the tariff story. I caught up with Sven Schneider, who's the CFO.
We do not see anything of a tariff impact in our numbers yet, number one. Number two, we do not get any feedback from our customers, which leads to that belief. So that's the baseline. Now, there are two things which we had to deal with and which we have baked into our forecast. The first one is currency. The dollar is much weaker. We had previously guided for 105 euro dollar. Now it's between 110, 115. Honestly, I don't know where it will be. So we just took 112.5 as a midpoint. That gives us a give or take 400 million revenue headwind in the second half. And then there is the tariff uncertainty. And I repeat and stress the word uncertainty. We believe it's likely that there will be a negative impact on demand in the next quarters, although we do not see it in the numbers yet. And therefore, we have made a guesstimate. It's no calculation because we don't have the data. It's a guesstimate of a potential impact. And we guesstimate that at 10% of our Q4 revenues, which translates, give or take, into 400 million. So if this is coming, yes, then we include that in our guidance, and then the guidance compared to last year is slightly below, indeed.
Sven Schneider, the CFO over at Infineon. How frustrating must it be for a CFO that basically kind of speaks Excel, spreadsheet, etc., that not to be able to actually know, not to be able to forecast, not to have a clear understanding of what is happening yet, because you're not seeing the evidence, you know it's coming, so you can't quantify it. I remember talking to the CFO of Airbus, talking about kind of they have visibility on contract by contract and they can see the drop down, but you have to know what the effect is to start with to understand what you're going to see in terms of the bottom line on every single contract.
Yeah.
It must be really frustrating for these guys. They don't know at this point.
Yeah, you know something's moving, but you're not entirely sure
But you don't know what it is, so you
yes.
can't start at the top and work out what the hit at the bottom is.
I thought it was interesting talking to Bosch earlier on and thinking about that tariff uncertainty. He was saying they're assuming that they don't all stay. But what assumptions would you make?
Yeah.
You know, you're operating in the dark, and don't overestimate your luck. Just don't overestimate how lucky you're going to be, was his guidance. So maybe as a CFO, maybe as a sort of cautious by nature
so
CFO,
we're talking about luck now.
You don't overestimate your luck.
It's fascinating, though, that that's exactly what BMW said as well, in that they are expecting these tariff reductions. And it's kind of the vibe that I think we had heard from the Trump administration, perhaps not in the car-making space or in the airline space, but also in the chips and the AI space as well.
Yeah, absolutely. Bloomberg has learned that the Trump administration plans to rescind some Biden-era AI chip export curbs. This comes as the US and China prepare for trade talks over the weekend. Nvidia and AMD gained on the news. It also comes ahead of President Trump's visit to the Middle East, which could be crucial on this front as well. Let's bring in Bloomberg Intelligence senior analyst Robert Lee. Robert, help us understand the direction of this policy. What has prompted the policy reversal on Biden's plans and now replaced with some uncertainty?
OK, well, President Biden's plan was arguably a little bit rushed. It was announced in the sort of dying days of his administration. And it met with quite a pushback from US players, including Nvidia, of course, and also from some third-party countries, particularly in the Gulf region, which are, you know, on good terms with the US. Countries like Saudi Arabia and the UAE, which maybe got caught in the middle. So I think the whole policy needed a bit of a rethink, and that's what Trump and his administration are looking at the moment. So I guess we'll see what they say over the next week. And as you mentioned in your sort of prelude there, Trump is actually taking a trip out to the Gulf region in the next week or so. So maybe that's coincidental or maybe deliberate timing on this front.
Talk to us about how that shows up for China, though. I mean, we've heard this narrative so many times, Robert, simply that every time the U.S. pulls kind of technology from another part of the world, the other parts of the world are then forced to develop their own and potentially better. Is this ultimately a positive for Chinese tech?
I think it might bring Chinese companies some short-term reprieve, but the direction of travel is pretty obvious. Global AI is a two-horse race at the moment between the US and China. Plus, you've got all the additional ongoing geopolitics, tariff wars, etc. China is the main economic rival and, a growing power on the global stage. So I think whatever happens, the US is going to go out of its way to make things difficult for the Chinese AI sector, reduce its access to leading-edge semiconductor chips and also leading-edge semiconductor fabrication equipment. The US is going to do anything it can to forestall Chinese technology developments, whether that technology is going into military or security apparatus or going into the mainstream sort of consumer sector. So this is an economic war.
Robert, just give me some winners. Let's make this simple. Investors are watching. They're trying to figure out who the winners and losers are going to be from all of this. Who do you think? Give us some names.
OK, well, the obvious one has to be Nvidia, but obviously it's not clear how things will play out at the moment. I mean, there has been some chatter, if I can put it that way, here in Asia, that Nvidia is looking to alternative routes to access the China market. And I think Jensen Huang himself did say, in fact, this week, that he thought the hardware opportunity within the Chinese AI market was around $50 billion. So that's a massive piece of business that you can't really walk away from. And if you remember, over the last month as well, after the H20 chips were banned by President Trump into China, I think Nvidia wrote down about $5.5 billion on that front. So it's caused Nvidia some short-term pain, but I think if they can come up with a way that is agreeable to the administration to access this, potentially huge market, not just in China, but within Asia itself, then that could be a positive for Nvidia. I think all I can say at the moment is Nvidia is definitely looking at potential options, to work around this problem. So we'll have to wait and see on that front. Other potential winners, I think, again, the Gulf region, countries like the UAE and Saudi are looking to invest many hundreds of billions, even up into the $1 trillion bracket in AI. That's a huge potential market for US companies. So if they are on a more favourable footing, once we see what the new legislation is, that could be a positive for them and provide some opportunities for US chip and server companies selling into the AI sector.
Great stuff, Robert. Thank you very much indeed. Robert Lee, Bloomberg Intelligence, senior analyst covering the chip space. Breaking news out of China.
Breaking news out of China, a proposal crossing the Bloomberg terminal that China is weighing a housing market overhaul that curbs pre-sales, basically making it so that developers will only offer completed properties instead of using the pre-sales model that in the prior iterations have exacerbated the housing crisis. We know this is a real estate crisis that's been going on for several years now. So this is something that's being put on the table with, of course, exceptions made for housing projects or local governments and some leeway in terms of implementation. So we'll see if that proposal does indeed come to fruition. In the meantime, let's go back to some of the other corporates here in Europe that have reported earnings this morning. Maersk and Rheinmetall at the top of the pile, with aerospace and defense company Leonardo reporting later today. Charlie Wells, drinking out of a fire hose this morning, is here with an update. We'll start with Maersk here, because it feels like they're tackling maybe every issue on the planet right now.
I mean, look, they control 14% of the global container fleet, and I think the question had been, what view are they getting from the trade war? You guys had a great conversation with their CEO earlier this morning. Let's take a listen at a point that really stuck out to me.
The rollout of the tariffs in the U.S. So far, what we have seen is this is mostly a U.S.-China issue. The rest of the world continues unabated in the same direction as what we have seen for the past year and a half. But clearly, in the U.S. And in the China relationship, this has already taken a bite in the second quarter in April and will continue in May.
And I mean, guys, some really interesting comments there on kind of how he's viewing that kind of trade tension between the U.S. and China. What did you take away from your conversation?
A couple of things, really. One of which is he hasn't yet seen the effect of dumping back into Europe. So this idea, and you're potentially going to hear about it from the Governor of the Bank of England a little bit later on, central banks are talking about this disinflationary impulse that potentially could come out of China to Europe because product is not going to the United States. Not seeing it yet, doesn't rule it out. but it's interesting that it's such a live conversation here in Europe at the moment.
I thought it was interesting how he had a lot of questions for us as well. So we were asking him things, and he was saying, well, I don't know. I mean, how long can these companies live without inventory? How substitutable will these products be? As if, you know, that whole industry is also scratching around for anything to peg an estimate on.
And he also made the comments around the Red Sea as well, which I thought was interesting, because so much of what he's talking about is not just the trade flows, but the geopolitical situation as well. He specifically said that even though there's a temporary reprieve in the Red Sea right now, the situation in Israel and Gaza is not getting better anytime soon, and that kind of limits visibility from that situation. That defense theme, the geopolitical theme, is one that we've seen across the board.
It is with some irony that I talk about defence companies, in as much as we're talking also today about VE Day and kind of an end of a major conflict in Europe. It's not as if we are done with that as a theme, though, and that stands out in what we're seeing today from Rheinmetall, but we're also going to get Leonardo a little bit later on as well today.
It really does. I mean, so much of a lift. You know, we saw that beat from Rheinmetall, and I think the question is, if you look back even just 5 years, their share price is up. This kind of like 2,300%. So this huge uplift this year, 170%. What is the catalyst going forward, right? Is all of this baked in? All of this kind of German defense, European defense spending, we know that it's been so, you know, significant. What is the upside for these stocks? I think we've had this positive earning, of course, but, you know, what else is there? Is it, you know, kind of Brussels talking more about procurement coming from Europe as opposed to kind of, you know, the European countries buying from the U.S.? I think that's the question.
Leonardo also on deck later on today.
I mean, look, they are, you know, they're coming up at 4:30. I think, again, this kind of defense spending lift is going to kind of play in here. They've had a little bit of change, too, in their aeronautics unit, kind of, you know, trying to get a kind of competitive edge there. But again, how do these stocks continue to propel forward? I think that's what investors are really focused on.
OK, Charlie, thank you very much. Charlie Wells with a quick rundown of some of the earnings stories that we have delved into in great detail and some that we have not had time to cover up to now. Let us just tell you that we have, of course, coming up a Bank of England rate decision. That is live just after 12 o'clock, a couple of minutes later, because, as Guy mentioned, VE Day commemorations mean it'll be 2 minutes after midday here. And then we have, of course, coverage of the press conference by Governor Andrew Bailey, and then an interview with him a little bit later on. You can watch the press conference, 12:15, that starts, or our coverage will start at least. That's on the terminal and on YouTube. We are also expecting to hear more about a UK-US trade deal.
10 a.m. Eastern.
We'll see.
Yeah, 10 a.m. Eastern time, apparently, is when we're going to get that news coming through. That's the idea.
Trump.
That's
President Trump.
Yes. I'm assuming he has some idea of what the timeline looks like.
Yeah.
So that may come up a little bit later on. But the timing is going to be interesting. The Bank of England's already made its decision. And it will already had its press conference by the time we get all that news coming out a little bit later on.
And before that, some comments, I believe, coming from Keir Starmer as well at about 9 o'clock. So we are on watch for that. And whether any comments around the trade front or, of course, any defense comments.
Yeah.
It's happening in 3 minutes' time.
I'm just putting all that together and telling the time.
Well, we'll see if he even addresses this at the defense conference. Unclear at the moment. That does it for the opening trade. Few stocks higher this morning. Stick with us. The Pulse is up next. This is Bloomberg.